Vincenzo'S Gold Crypto Investing. And a quick update, you can see right there, 4 degrees at 10:43 this afternoon on the 6th day of January, or otherwise known as January, on this early day in January still, on this midwinter. And it feels like midwinter today in the greater Bloomington metropolitan area in central Illinois, albeit we got a beautiful sunshiny day today. You see that gorgeous sun up there with the crisp light blue wintertime sun or sky, right? You get those crisp light bluish skies in the wintertime. I love the wintertime sky, and a gorgeous sunshine out there with just some high clouds, as there is a significant winter storm tracking just off to the south into southern Illinois, and I'm more into Kentucky and Tennessee and moving towards Washington, D.C. again, where they're getting 6 to 10 inches of snow again. And I sit here in central Illinois where it's cold as a motherfucking witch's tit, but they don't get very much snow in the greater Bloomington metropolitan area, right? It gets colder than fuck. Like I said, it's cold as a witch's tit here, but they don't give you the snow, which is depressing, right? Another brief update as I'm driving to pick up some bolts, so we got a few minutes here. We can see the Bitcoin continuing to fall. I've been trying to warn you guys for months. Since I've come on, since Vincenzo'S Gold Crypto Investing's come on, we've been telling you this pattern's going to be bearish. But there's massive pumps from lows to highs, right? Or highs to lows, and they pump back up before they crash again. But I've been telling you this crypto is going to be very, very bearish in the next, to go to the latter part of 2021 and 2022 and possibly 2023, as we entered in a bear market, even though it pumped up to all-time highs on a huge rally, which was to me not just pretty much of a standard pump and dump. But minus that, you've been in a bear market since the springtime when it pumped and then flushed down to, I don't know, 28,000. That in-between pump was, to me, the final run that got everybody in, and a lot of people that were holding a lot of Bitcoin, the big whales that were in there for years, finally dumped out on that run from 28 to 68 to that second run after the all-time high, the previous one in the spring. I think they dumped a lot to retail traders into there, and I think now that they're sufficiently enough out of the game and have locked in those massive profits, as most of those whales and the big-time players market movers bought in sub 1,000 Bitcoin, right? So they took full advantage of that last rally as they seen the hype and the momentum was being exhausted, and they took their profits. And now you can see what I think you got going on here is we hit that underneath support. And if we go out to the daily time frame on my phone, because it's a lot harder to see, you can see where I think we're going to start to go is we're going to start to trade back down. And this was just a fabulous, glowing, classic, all jabroni enticing mountain double top. See that? This is a classic double top up here. Look what we had going on here. That was the springtime rally, right? And then the peak that Vincenzo'S Gold Crypto Investing got online right here. This is when I started making videos, right in here as it was rising. But I was diagnosing, sniffing out, and detecting overting and subverting, and staying 69.5 steps ahead of the competition on YouTube and in the rest of the crypto sphere. When I was just getting my name out, telling you and showing you the technical reasons with the price action, the volume, the moving averages, all the good stuff, why this was a topping pattern and the price was going to crash, right? And it did. It came down about 50% from its high, and the altcoins, most of them are still down 75 to 90% from their highs. And we told you why it would go down there, and we told you why from down here it could bounce from here. But I thought the highs that would go on my bounce, what I was forecasting for, was right there at 52,000 to 53,000, right in here, right up in here. I thought that was going to be a classic spot where the double top would roll over on itself, and it would make perfect sense. But like the stuff always likes to do, they like to run up a little bit higher than the market thinks, and it did. But we didn't waver, and now it's starting to roll back over on itself as it's breaking key underneath support, right? And it's getting below it to have it now acting as overhead resistance. And that is how we diagnose this out in Bitcoin. And we've been out ahead of this, far ahead of the competition. And that's what makes Vincenzo'S Gold Crypto Investing stand apart from this. And now you can see we broke that rising wedge that we were in, when we formed the second part of this double top, it was more of a rising wedge or a rising channel, just like the first one was more of a rising wedge. They're both reversal patterns, the opposite way in which the pattern is developing. So if the price is moving up like this, they're a reversal pattern eventually to the downside, because this pattern is a rising channel, right? That's a rising wedge, and the only difference is a rising channel and wedge start out wide at the beginning, and a rising channel ends about the same at the end, but a rising wedge gets very narrow, like a duck's beak, right? And that's why it's called a rising wedge. And it's a bearish reversal pattern, right? Or it's a bullish pattern, but it's usually the top end of a bullish pattern. It's letting you know the bull run's probably going to end and there's going to be some sort of correction. And usually they correct to the bottom of the channel if it's just a midway correction within a bull market, right? But that's why we have our underneath target down here, and it's going to come down here after we flash load here, which confirmed the breakout up here where that little circle is. You had the volume spike down there. You see a little volume spike down there? Confirms the price action flush, confirms the breakout, but then we diagnosed how they like to get bought back up and back test that major lower support, which is now upper resistance, the falling channel, right? The bottom support line, which is upper resistance. They like to back test it, which it did. It got rejected, and we laid out how it would come back down. It would get caught up on this orange fib circle, and it did for a few days. It danced on that orange fib circle, but now it's breaking the orange fib circle like it should have. See that it came back up, almost came, it didn't quite back test the actual line. It got knocked down by the moving average, but then it's been dancing along the orange ring, which last time it hit it way back in the price action, it acted as resistance, so we knew it would act as some support. But I forecasted as it was breaking down out of here that after for a few days to a week or two it danced on here, that it would finally break it and end up back down here. Just like we told you, we were eventually after this big wick right here, and we got bought back up. All during this, I kept telling you, don't buy into the hype train, because this price has to come back down to right there, and it finally did right here. Now we can trade up and down a little bit, ride down this orange fib circle, any kind of overshoot pump. This green moving average is going to start the downtrend, we'll reject it, and eventually we're ending up down at $31,112, and then it'll dance around, and most likely when you come down there real quick before I got to let you go, you could bounce back up into something like that to have a nice return rally, and then you come back down to finish out this descending triangle, and then you flush down here, and this is our next big target down. After we meet the 31,000, this is your next big target all the way down here at $20,000, and that could be the start of a phenomenal, fantastic panic in the crypto market, right? Like, subscribe, and share to Vincenzo's Go Crypto Investing. Peace and love. Peace and love.